Welcome back to WellPal, our GoodWhale channel. My name is Eric. Today I'll be doing some recording on 大初二, which is Lunar New Year second day. And for all the WellPal subscribers, sorry for missing out quite a few sessions or quite a few recording previously where there's a lot of earnings coming up. It's kind of challenging for me, juggling between like families, kids sick, and also work. But nevertheless, since it's a public holiday, it's in the morning, so why not I just take this 20 minutes to do some reflection and recording for some of the companies that I own and also the company earnings result. So likewise, a lot of you guys right here, you are busy professional, you have big families that you need to take care of. So hopefully at this time, there's some pocket of moments that you can rest and then watch this video. All right, let's jump into the first companies, and later on I have another 3 companies I'll be recording subsequently and then upload into our YouTube channel. So remember to subscribe, and then if you like it, just give a like. If you have a comment, just comment on the bottom section. Right, so let's go. I've prepared this for quite a few weeks. I've not been like collating and making it into a perfect slides, but instead of like waiting until the next week after coming on Chinese New Year, so I was thought, why not just do it? All right, so in Chinese we call it 先求有再. So let's do it with what we have, and then I think best we can do more discussions and then we can exchange idea along the way. So Microsoft have down 20%. I haven't checked last night's share price, but generally it have down 20%. So let's look at their quick earnings first. This is the things that I've been missing out. So week 4, week 2, week 4, and then week 6, week 7, which is this week, and then next week we will have a live session. So make sure that you log into your WellPulse to watch the live session. So Microsoft fiscal Q2 2026 is still a lot about AI. But even with AI, with a lot of growth, the revenue is growing, the Azure is growing, but the share price just dropped. What happened? Okay, so they have been keep record high earnings. So right now is their record level as well. It's 81 billion with 70% year on year. So it's like a huge $1 trillion company. It's still growing at 17% year on year, which is very, very impressive. It doesn't just beat the inflation, it's like 2 times the inflation and close to like 20%. So it's like high double digit. And because they have operating leverage, you can see that their operating income have grown 21% further. But here, one thing to highlight is if you look at their earnings per share, why their GAAP earning is 5.16, which is 60%. So impressive. Your revenue 20%, your earning per share 60%. What happened? Top line revenue is the so-called best indicator than income. Why? Because income, there's a lot of things in between, and it might not show the best picture of the company in terms of like the revenue generating power. So there's one exceptional item that make the EPS grow by 60%, but if you remove the exceptional item, it will just grow by 24%, which is make more sense. All right, the non-GAAP EPS is 4.14, which is true measure of the company performance. So year after year has been growing, and right now it's growing at in the high teens. Right now it's sitting at 81 billion. You can see that in quarter 2, 2023, it went down as like just 2% growth, but generally it's still at the high teens area for the past like close to 5 years for a giant like Microsoft. For this whole recording, if you couldn't remember anything, so this one item I would like you to be more alert, right? Because this is not a true representation of Microsoft revenue generating power. All right, so remember in the previous recording that we talked about, Microsoft have put in investment into OpenAI, and right now because OpenAI is going into IPO, they have restructured it in a sense that right now Microsoft doesn't recognize the line item, they are recognize assets as a whole. All right, so if asset as a whole, right, according to their balance sheet, so they have some investment so-called into OpenAI that's resulted their valuation go up. This resulted in 1.02 per share in earning per share impact. Is it a good thing or is it a bad thing? I would say neutral because it doesn't represent Microsoft. But when I go for IPO, it will definitely affect their earnings because whatever investment that they hold, if they record as a share price fluctuation, right? So when the share price of OpenAI, when they listed, went up, it will record as earning per share. When it went down, it will record as a loss. So it's something like Warren Buffett, the Berkshire Hathaway. So if they record the share price went up, it will be earning. When the share price went down, it will be a loss. So it doesn't truly represent the strength of the business itself. I think this is the earning per share changes. So you see, hey, there's this 60% right here. Don't be alarmed. It's actually just 20%. Actually, their earnings per share is quite fluctuate. compared to their revenue. So there's a few years that make losses, but generally their earnings per share grow up. But what I like to draw more insight right here is not their earnings per share kind of like up and down. It's more of like their margins. As a $1 trillion company, what is their margin? 5%, 10%, or is just 1-2%? Correct? Why? Revenue is vanity, earnings is sanity. But the more important thing is what is their margin in their business. So let's say they make a lot of revenue, but there isn't any margin. So what point running a business, right? But even if their revenue is low, but there's a higher margin, means they can get a lot of income later on, translate into cash flow. And then if the company is huge enough, they have more capital, then they'll pay out for investors as a dividend. All right. When we look at revenue, we also look at earnings, and then in terms of the earnings, we look at their margins. So you can see that operating income growth by 21%, even without OpenAI gain. So let's look at their margin right here. So this is still the revenue growth, all right? So total revenue is still growing. You can see operating margin at 38%. So let's just do a simple calculation right here. So you can see that in terms of the operating profits, right, they have been increasing year after year, quarter after quarter. With their revenue, their operating profit still increase. And what is best about this business is, even if their revenue grows slower, but their operating profit can be faster. Why? Their operating leverage right there, right? So revenue may be grow at 10%, but because of the operating leverage, in other words, the more revenue they gain, right, it's straight through their bottom because their variable cost is lower, the fixed cost is already there, so their earnings will shoot up even higher. Right, that's resulted in their operating profit grow faster than their revenue. But there's like downturn right here. But all in all, if you look at their operating margin, so 38 divided by 81, right? So look at 46% operating margin. There's difference between different industries. So if you look at F&B, it's like maybe sometimes it's just 10 or even lesser. But for a software business, there's the operating leverage, especially for Microsoft. They can garner a big profit margin right here. So a lot of investors, if they are investing into like a software company or hyperscaler like Amazon, Google, or even any company that declare that they have AI portion, they will definitely put a lot more reliance on their AI segment growth. So let's look at Azure particularly. So Azure, the demand have outstripped their supply. So there are three segments of their earnings. Intelligent Cloud is one of these segments. So Intelligent Cloud generally have grown 30%, but the Azure growth have grown more than 39%. And what I like to point out right here is in Q2 FY26, there's a lot more demand coming in, and their revenue is being capped by the demand. All right. So in other words, there's a lot of demand out there asking for more resources from them, and they couldn't keep up. So that's why they keep on like doing CapEx expenditure to increase their capacity, so to provide to their end client. So if you look at their revenue, right? So their revenue, wow. Intelligent Cloud have grown for 20%, 21, 28. Right now it's like sitting at 30% growth. So one of the things that people worry about is, okay, so yes, your Azure is growing, but you have been investing a lot of money. So for the previous few quarters, right, so they've been like 20 billion below. And this quarter, so the financial year end, 26, Q2, they have invested 38 billion. So in other words, they are pouring like their whole operating margin into CapEx. And people are worried, if their CapEx are so high, they grow just slightly, so much so that right they invest more than what they earn in terms of like their intelligent cloud. So their capex right is always lesser than their intelligent cloud kind of like revenue. But this year itself, they invest more than their revenue in terms of like intelligent cloud. So what happened? Where is the growth of the business? So these are the things that worry investor. So let's go through their earnings as of right now. What they also want to show, right, is their productivity and business process revenue. In other words, their Microsoft 365, right, have been growing as well. So with the capex, not just Azure growing, their own business is also growing. Their own Microsoft 365 is also growing. And some positive result right here is their Copilot page seat has been growing and growing by like 160%. Right now, it's sitting at 15 million. And if I'm not wrong, the last check of their total M365 like seats, right, is around 400 million. So right now, they only have 15 million Copilot paid seats. In other words, they have a lot of more growth area right here at Microsoft 365 Copilot paid seat. But with so-called Claude Core Worker, so if you recall in some of the sessions that I shared, like Claude have been like announcing they have this like new feature which is Core Worker, whereby it can replace some of the automation system within your old workflow. In other words, the Core Worker can paid by so-called token spend. It's not bound by your paid seat. And then this so-called all the companies with all the paid seat, right, get affected. Why? Because Coworker can replace what you have in Microsoft 365 Copilot, for example. So this is the reason why people are worried that, hey, if Coworker can do all the job like Microsoft 365 Copilot, then I might as well just use Coworker. And then I can code, I can automate some of my workflow, that can retrieve some of the documents is in Microsoft, can make in Google, in Amazon. So if every other so-called like software company are forcing people to pay all this paid seat, and I can just use Coworker to do all the work. But of course, Microsoft 365 has their own ecosystem. You store your document there, you have your own like ERP right there, some CRM system are within Microsoft. So there's a lot of data sitting within like Microsoft. So there's this like strength in Microsoft whereby they are not just application layer, there's their own like so-called memory layer and processing layer right there. So this is why for me, I'm not so worried. Yeah, there's a lot of like basic growth. There's even Git Copilot growth. But all in all, their intelligent cloud, their productivity segment, which business productivity segments have been growing. But what is the segments that's not growing is really their gaming revenue, their exports. It will show that, hey, maybe for human, when we go for entertainment, right, all these gaming box, right, might not be the go-to device anymore. You maybe just play on phone or maybe your laptop. Yeah, not so much about gaming devices. And yeah, when they invest in CapEx, right, there's two segments that they invest into. One is your data center, your land, your construction, your building. The other segment is whatever fit into the building, which is your chips, your GPU, your server. So like what you have heard all the while, which is they have put in a lot of order to buy GPUs from NVIDIA, for example. So all these GPUs, chips, their so-called their life is very short. Maybe 2-3 years, you'll be the next generation, and their server have to keep up. So they have to replace whatever in their old data center, for example. So this is the thing whereby people are so if you keep investing all this capex, right, and this GPU right obsolete so fast, right, means you have to keep pumping in money, right? It's just like our airline business. Every 5 to 7 years, if I'm not 7 years, right, for SQ, you have to change your airplane. And then, yeah, it depreciate after 7 years, right? And you have to come out with capex. And I mean, 7 years later, right, with inflation and everything, your airplane it become more expensive. So you have to keep pumping money. Means whatever you earn, right, you pass it to someone else. So this is the thing whereby the market is worried. Wow, so the record high level of investment, does it make sense? Can you get back your so-called your cost, or even you can make more money from that? And what's more than that is another recap right here. So one factor is, so this EPS 60% gain is actually is not represent their business. It's just 20% gain in our EPS. Operating margin is healthy. It's sitting at close to like 40%, and they have operating leverage right there. Intelligent cloud is growing. Azure is growing at 39%, close to 40. But market want it to grow faster because of this. Because they put in so many capex, right? Is the capex healthy? Let's see, right? But what I will show right here is the capex that they put in not just for Azure but also for M365 as well. And you can see that there's like potential to grow right here. 400 million M365 seats. Right now, it's just sitting 50 million Copilot seats. So for you who don't know, right, it's two separate payment, two separate subscription. Microsoft 365 and just Microsoft 365. Copilot, you need to top up. Another thing, the third item I want to share here is their capex. Part of it, like 70, close to 70% of it is short life assets. Means the GPU become obsolete, they need to replace it. But of course, they also say some of the GPUs after 1-2 years become mature, right? They will still continue to use. It's not that after like 3-5 years they will just dump it or whatever. It will get into peak performance like after 1 year, if I'm not wrong, from what I heard. But what they say right here is even though some of the GPU or their data server sites, their performance may not be as best as the latest like GPUs, but they still continue to service their clients. All right. And the fourth right here is, yep, so people are worried. Hey, all your like so-called backlog, your remaining performance obligation means your future orders. 45% is from OpenAI. And one of the biggest problem OpenAI is facing is cash flow problem. So if OpenAI, you commit the order, it cannot pay, this RPO, you become what? You become zero. So potentially this portion, what they say is like if OpenAI cannot pay, you'll be a risk. They will not have this growth later on. So this is the portion whereby it's like alarming. So the guidance is like they are still expected to grow at 37 to 38%. And what happened is their growth is actually capped by their own so-called capacity. They don't have enough supply to like provide this growth or even higher growth. The capex that I already put in. So you have put in capex, and then you say it's still capped by your supply availability, means you have to wait until the growth come in. You spend money, but the growth cannot come in yet. but they're still expecting their revenue to be growing, operating margin to be rise. All right, so this is a thing whereby I still see very positive point about like Microsoft, right? So they also talk about memory volatility, about like Micron. We also talk about what is it called, pure storage. So memory market or even SanDisk, the share price have been growing very well. Why? Because like you have all the GPUs, you still need your CPUs, your memory to store or to perform all this like AI computation stuff. Yep, your GPU is grow. The cyclical effect for memory is coming up. So I think I share in what is it called? ASML. This is just a reconciliation. So if I look at Microsoft, their revenue is still growing, operating margin is still high, and then they still have a lot of cash flow, and the cash flow to their capex. No, they use their cash flow to fund their capex, and I'm not so sure. I guess it might be a possibility whereby they will look at perpetual bond, just like Google. So Google, they have raised perpetual bond to fund their AI project. And when the rates are low, right, then the perpetual bond might make sense because like the Fed rate have been reducing. I can't remember what's the latest to the lowest rate. And with the low rate, if you go for perpetual bond, means your rate is fixed at a low end. So I can see why Google is doing that, but I don't know whether Microsoft will do that. Will raise other funds just to fund their so-called AI projects. So one thing, growth is still growing, revenue is still there, growth is still there, operating margin is high. The Azure is like kept by so-called the supply, it's not by the demand. So the demand is outstrip supply. Just that there's a few warning signs. First is they put in a lot of capex, and then the revenue hasn't followed yet. Second is the bulk of their RPO is like OpenAI. So if OpenAI don't have cash flow, then they have risk of not turning the RPO into revenue. So these are the positive and negative signs that I see in Microsoft. And let's look at the valuation. So it might be a great company. If you buy too high valuations, then you are hurting your portfolio. So if you look at right now, this is, I think it's Sunday. It's like around $400, and their target price is 596. And then the meter right here for Gainify, it shows like closer towards buy, and right now it's undervalued by 49%. Okay, and let's look at their fields. I will not look so much on their PE. I will look more on their PS, their price to revenue. All right. So their price to revenue, right? This is for price to revenue. Fire range is between 8 to 14. Right now, it's closer at their lower end range. 8.48 times. If you know how to look at it, it means like they are trading between this price to revenue band, and right now they are sitting closer to their low end, which is 8 times, closer to the lower end. Okay, and if you look at their trend, right? So this is the time whereby there's what all the crypto winter, SaaS winter, software winter, whatever winter, it dropped until like close to 8 right here. And right now, after 2, 3, 2, 4 with all the interest rate adjustment, and went back to 8 times again. So I've been investing in Microsoft since 2018. I'm a long-term shareholder. And then back then, right, I was asking my people around me, hey, why no one is talking about Microsoft? Why no one is investing in Microsoft? I think there's a few couple of reasons. One of it is like, it's boring, this company. There's not growth like to the moon kind of return. Second is if they really invest in S&P like, or even QQQ, part of their investment, or because S&P QQQ contains like Microsoft as well. So it's like the Max 7. And third is maybe, just maybe, if you know how to pick companies, some of the companies might perform better than Microsoft. And I see the reason one might be the majority of the reason. Microsoft, everyone knows it. There's an excitement of growth company. Since then, 2018, when I start investing to US market, Microsoft is one of the first company. So if you have heard of me sharing before, I think the current CEO will refresh. If you don't know about him, go find this book called Hit Refresh, where he shares how he aligned a few segments of the company together. So if you like this video and you like to be updated with future upcoming video, right? So just join us at our Telegram group, which is real_goodwill. From there, I'll just hopefully update every week, not just about powers, but also some of the market views and stuff like that. Previously, I have this WhatsApp group, and I thought I should not add everyone into the WhatsApp group. One of the reasons is like your number is exposed, and in Telegram, will be more conducive environment in the sense that you feel more safe. So you just scan this QR code or just search for Goodwill and then join in the Telegram group. So that's all for this video. Thanks again for watching this. If you like this, just click like. Any feedback or if you thought you have different thoughts about Microsoft, just put under comments and I'll read every of your posts. Thank you everyone, and then see you in the next video. Bye bye.